Wonderful. Thank you, guys. It's looking much better now. It's looking much better now. So I believe I'll be able to launch and begin our session normally in just a second. Okay. Getting close. Almost there. The alien's not working today. You're right. You're right. And I am doing what the humans we do, which we should never do in trading. I am hoping it's gonna be working soon. Okay, it's looking good now, guys. I just need a couple more minutes, and we will begin. Okay, thanks for your patience, guys. So nice to have a smooth beginning of the session, and it's so uncomfortable to have a not so smooth and beginning of the session because obviously, I'm thinking of you guys, and my goal is to accommodate, accommodate the best I can, and obviously I understand that we are busy people, etc. And therefore, having a beginning part of the session which is not that smooth, it's not. I believe we're gonna start. Okay, I believe we're gonna start. So hello everybody. Hello everybody, and hello again, Mark. Yes, and welcome to the longer term session, AutoUFOs get together. Trade station. Sometimes we call our sessions get together sessions. Sometimes we call them GT picks. GT, of course, for get together, and picks because the idea is to pick trades, right? The idea is to kill many birds on one stone. In one hand, of course, learn, improve ourselves, support each other, get better at understanding the app, all those things which are, I guess, let's call it obvious, but also most importantly, also grow. Okay, when I mean grow, I mean grow the account, grow as a professional trader, grow in any way, and this means that we need to pick trades, right? So that's why we also like to call our sessions GT picks. Okay. So anyway, so let's begin with our GT pick session for the day. Before we start, a really quick disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay, here we go. So we got it. We got our beginning part of the day with the full disclaimer, presentation, platform ready here with symbols that we're going to analyze. Normally I would also talk about certain key websites that you should be aware of. So let me load them very, very quickly here. So I'm going to rush through these. Normally I would take a little more time today. I will rush through it since we started with a little delay. But really the first website for everybody to be aware of is trade.com. Why is that? Well, million reasons, isn't it? But one of the key reasons, get together, right? We have a button here on the upper left. When you click in this button, you gain access to the whole schedule that we have planned at the moment. And you can see the type of sessions that we are running. So today we are doing longer term. So we'll be focusing on, especially on options, and longer term means anything above intraday. Okay, so the sessions that are called short term means that we're going to be in and out quite quickly. So we'll be trading, the 2-minute time frame, the 5-minute time frame, the 10-minute time frame, the 15-minute time frame, things like that. Anything above that, we'll call it longer term. We don't call it long term. We just call it longer term because it could be anything above, right? So we'll be exploring so many different possibilities, especially as we spend time in the sharpening sessions. On Sunday, we have a sharpening session at this time. And I recommend everybody to join us because those are the sessions that we spend, those are the sessions where we spend time together when the market is closed. And instead of doing 1 hour, we can do 2 hours, even more if needed. And we can just spend time understanding certain things. Okay, for example, if today I use options and some of you, let's say you have not traded options before, well, it may be a little overwhelming. Well, those are going to be the sessions that we use to clarify, to undo the overwhelming effect of certain strategies or products that you may not have traded before, and help you grow from the knowledge and skill part of the business. Okay, and then in the longer term and the short term sessions, that's when we help you grow as you practice from the skill building aspect, from the experience, from the confidence level, from the mindset level. Okay, sharpening is a different story, and we conduct less sharpening sessions than the long term and the short term. But just know that this will change as well as time passes. And as time passes, if you compare what we used to do in November when we started and what we do now, I think that we are much more organized, and we will continue with this level of getting more and more organized. Okay, let me tell you what's going to happen on Sunday. Okay, and if you have any trader friend who is interested in what I'm about to say, make sure you spread the word so everybody we can all be together on Sunday. Remember, these sessions are free, so you can certainly spread the word easily. But on Sunday, what we're going to do is that we're going to talk about options. Okay, we have received many emails, suggestions. We need to do all sorts of sharpening sessions. A big topic that you guys asked recently as well is trend line breakouts. So we're going to be talking about a million different things, but really the topic that, at least for now, seems to be the one that you need reinforcements the most on is options, because every time we have been doing longer term, I've been talking about options, and of course not everybody has traded options, so some of you have sent emails sharing that it was a little too fast, I got confused, etc. So we need to talk about options. Okay, so Sunday is going to be an options day. Okay, and we are not going to approach options trading in a classical way. Okay, many people are intimidated by options because options got this reputation that options are complicated, things like that. Forget about it. We're going to look at options in a way that is very straight to the point. No breaks, no overcomplication. And we could certainly talk about all of that later in the future. But the idea now is to reach efficiency. Okay, and then once you reach efficiency, then let's get even better, right? And then we'll talk about more things. But Sunday is going to be fun. Okay, so recommend everybody to be ready for that day, even if you haven't traded options before. Okay, because it's going to be a powerful day for you. 1 second, guys. Sorry. So now, all the other tabs that I normally share with you, the Facebook, the LinkedIn, I'm going to skip everything. I'm just going to show you one more thing, which is okay. And what I would like to is to go ahead and click on the bell. Okay, when you get into our YouTube channel, this is for us to be connected more efficiently, because that way you get real-time notifications when we post videos and stuff. So I would like to ask everybody to going ahead and clicking on the subscribe button. But most importantly on the bell, because this is how you get real-time notifications when we are posting videos or we are doing anything. Okay, so please go ahead and keep this in mind. And I just shared on the main stream, I shared the URL for the YouTube channel. Sometimes it's a little long as a URL, to be honest. So maybe you just wanna type with UFOs, right there in YouTube, and with UFOs, and then you can subscribe. And again, done. Okay, done with the introduction. Time to get into TradeStation. Okay, time to get into TradeStation. Okay, so it's a longer term. It's a GT peak. Longer term opportunities. Okay, so what are we gonna do? We're gonna be looking at the options world sessions, and if you don't, you can certainly take a look at our YouTube channel. Okay, YouTube channel, where you have the link here. Okay, in our website, YouTube sessions, and you can look at all the prior recordings. The beauty is that the title of the recordings will show you which ones are the ones that are longer term. So you can see here, longer term, longer term, longer term. You can go ahead and go back in time and watch them, and you will see that in the past we have set up a scanner here that is looking for stocks with certain level of liquidity, with options that got a decent amount of premium built in. So those are the stocks that we would like to use for what is known as non-directional trading. Okay, and there are many ways to do longer-term in trading or longer-term investing. Many ways. In the prior sessions, I've been exploiting the use of non-directional option strategies because there are many advantages of doing so. Having said that, there are other ways that we will exploit as well. Okay, but since we started with options, okay, we will certainly need to go deeper into options. Okay, and going deeper into options means many things. Means to look at how great it is when you profit, but also look at what happens when you're wrong on the trade and you end up losing. Because the last day we were together, we planned a non-directional trade with Tesla, and basically, the vertical line that we have in here, okay, this vertical line represents the day we entered the trade. That was the day when we did the session together. It was January 16. And the upper line here, which I'm going to make darker blue, and the bottom line represented a high probability range between UFOs, where Tesla was supposed to keep trading in between for a while. And if we were to reach this line, okay, which is next Friday, which is January 25, which is tomorrow, well, then that would mean that the option would have expired. You would have sold options, collected premium, you would have made money on time decay, and that would be the end of the story. Okay, but that's not exactly how it happened, because a couple of days after doing the trade, a dramatic move on Tesla took place, and as you can see, there were a lot of news that were reported on Tesla, isn't it? A crazy panic came on board. Many of the on-field orders to buy were canceled. Okay, that's the reason why when our UFOs don't work well. Why is it? Because the orders that were still on field waiting to get filled were canceled, and that was as a consequence of the news, and therefore, in this case, we got stopped out. Good news is that the loss was for a very limited loss. It was not a big deal. An iron condor. So today I don't have the opportunity to illustrate or discuss a trade with a great amount of joy where we ended up profitable. Today I have the opportunity to illustrate a trade with less amount of joy, but it's part of trading, which is when we get stopped out. Okay, which happens as well. In this case, this major move out of a specific event was responsible for those orders to be canceled. Okay, good news. Even though all of this happened, well, the trade lost less than expected. Okay, why? Because we still collected. If we got stopped out here on January 18, and the trade was entered on the 16th, so we collected 2 days of time decay, and it's not humongous, it's not a lot, but it did help a little bit, and in the end, you ended up with a small loss of trading. Okay, but the beauty of these non-directional trades which I'm gonna close this window. We don't need it anymore, and we're gonna look into that with new market opportunities instead of past market opportunities. So the beauty of those non-directional trades is that they make money, or they reduce the risk as time passes. In other words, if I got stopped out of the Tesla trade the same day I entered, I will have lost more compared to if I got stopped out 2 days after. And that's great, because normally the traders that do longer term investing, normally, not always, but normally, they are also using a greater account size. The traders that normally do very short-term trading, normally, not always, but typically a trader does very short-term trading when the trader has a limited account size and therefore needs to trade more often in order to produce significant results. When a trader has more capital in the account, it is a normal thing. Again, not always, but it's a normal thing that a trader trades less often, and therefore longer-term trading it's pretty common in that scenario. Then many other traders, they will combine longer-term and short-term. So yeah, there is no right or wrong. It's his business. We can operate the business in many ways. As long as you manage the risk, it's fine. But again, I was just making a statement of something that is quite normal to find. Now, if you think about what I said, which is quite normal to find, which is longer-term trading is normally done with accounts which are a little larger in size. Well, think about the consequence of a larger account. A larger account always carries a greater risk. Always. Think about a trader willing to risk 1% per trade. Well, it's not the same to risk 1% of $10,000, for instance. That's $100 per trade. To risking a 1% of a $50,000 account. And I'm not saying $50,000 is that big either, but it's 5 times more than 10,000, and therefore the risk is 5 times more, even though the percentage is still 1% of the account, but because the account is more, the dollar risk is more. So one thing that is normally very appreciated, and that's why we started with options, because it's great for that purpose and other purposes as well, but that one is a good one. One thing that is appreciated by traders with larger accounts is to have the least amount of risk as possible, because even if it's a small percentage value of risk, because the account is more, then the dollar value is more. So the beauty of non-directional trading is that it carries time decay built in. Time decay means that as time passes, the risk is reduced or the profit is maximized. And because time passing is a sure thing and time always passes in the same direction, it's really a great way to approach longer-term trading. Okay, it's not the only one, but it's a really great way to approach it when your priority is not to create these profits, but also to really add safety, or add, let's call it a dynamic approach to risk management, where every day, it's just because one day of time passed. Okay, so that's a little bit of the concept. Okay, and again, I cannot wait for those sharpening sessions where we talk more about it, so you get to see how all of this works. Okay, so what I run the scanner. I ended up with this list of 22 stocks in the US market. Those happen to be the stocks that meet certain criteria, which are criteria about not trending too strongly, being sideways or in a very shy, very weak type of trend. Stocks that got a great level of premium built in their options. Okay, and if you were to have all of this, and on top of that, you were to have UFOs above and UFOs below, green above and red, red above and green below, what would that tell you? Well, that would tell you that not only that stock is not trending strongly, it's moving sideways. On top of that, it's likely to remain in this way. Why? Because if it goes up, the red UFOs will bring it down. And why? Because if it goes down, the green UFOs will bring it up. And therefore, it's likely to remain kind of sideways for a while. And if that's the sell options below and collect the premium and let time pass. And that's what we did the other day. And we're going to do it again. Okay, and again, I'm fully aware that, especially with the sharpening sessions, I will be explaining many things that are so important for you to understand about options. If you never traded options before, or even if you have traded options before, we'll talk about things that are key, because sometimes we forget And as you get all these theoretical understanding of options plays, then our get-together sessions for longer term are going to get so much more easier to follow. Right now, to some of you, it may be a little bit of a challenge if I get into planning trades and options where some of you have not traded options before. But it's okay, and I would like to ask you, as I did ask before, I would like to ask for a little patience from your side to bear with me, because if that's okay for me to say, I know what I'm doing, just bear with me. And that way, when we get into the sharpening sessions and we get to explain more of what you need to know about options, you know what? It's not going to be the first time you saw it, and it's going to click so much faster. Okay, it's just like learning how to cook good eating experiences versus learning how to cook where you never eaten a good meal before. Is that making sense? So it's kind of the same idea that I am pursuing in the back of my mind, okay? So looking at the comment box as well as I begin planning trades here, Supply and Demand Trader, how are you, my friend? It's very good to see you. Hi, Jose, looking forward to another great mentoring sessions with you. It's my pleasure. These sessions really help us learn what we learn and get familiar with AutoUFOs. Thank you so much. Thank you so much for saying that. Thank you so much. And appreciate very much as well, Fernando, Patricia, your very good sense of humor at the beginning of the session with the aliens, okay? Anyway, so let's begin here, okay? Now that we had a proper understanding that what we're gonna do today. So I got a list of stocks. It's 22. They meet all those criteria. Of course, out of experience, I know, for example, that the liquidity found in Alibaba and the volatility found in the options with Alibaba, it's quite nice. Okay, if you compare these with, for example, let me see, McDonald's or Starbucks, for example, you know, normally those stocks provide less volatility, less premium. It's a little bit of a different story. Is that making sense? So it's quite nice, and any of those 22 stocks is okay for the purpose of planning certain trades. But I'm going to start with Alibaba. I know it's a stock which could provide good premium. Okay, so I'm going to load two things. I'm going to load Option Station Pro, so I can go ahead and take a look at the options for Alibaba. At the same time, super important, I want to look at briefing.com. Okay, I'm going to click search, and I'm going to type the symbol of Baba, which is Alibaba. And the reason why I'm going to do that is because I'm looking for anomalies. Okay, that's what I'm looking for. I'm looking for anomalies. I'm looking for options to be very high price, so I can sell them for a very high price. That's what you want when you sell, high price. But I want no reason for the high price. That's what I'm looking for. Okay, if the options were to be very highly priced, and the reason why is because tomorrow Alibaba is going to report earnings. And when Alibaba report earnings, normally you got this huge, you know, jump in price for Alibaba. Well, you got a problem because I'm going to take a huge amount of risk trading Alibaba options because tomorrow the gap that may be produced because of the earnings report may surpass my UFOs. Because remember, when there is an event, could be a news, an earnings report, it could be that the orders get canceled. Could be institutions, you know, remove their orders from the market, and therefore, even though we have a beautiful UFO on the screen, it doesn't produce the desired result. Okay, why? Because a key reason, in this case, an earnings report. So I want to make sure I'm looking for anomalies. I want high premium in the options, but I want it to be for no reason. Okay, I want it to be for the reason that many market participants that don't know much about how the markets work are willing to buy everything available in Alibaba, and because they buy everything available in Alibaba, well, the prices of the options go up. But really, there is no reason for that, but many people buying the options just out of speculation instead of a real event behind the scenes. Is that making sense? That's what I call an anomaly, okay? So here you can see with Alibaba, January 30 is the next earnings report, and January 30 happens to be in the middle of next week, okay? So options expire on Friday. Next Friday is February 1st. if I trade options that expire on January 30, I got a problem because my earnings report is going to happen before the options expire. Okay, so I'm gonna pass on Alibaba. I'm not gonna use Alibaba. Just out of being visual for some of you that have less experience trading options, I'm just loading Alibaba on the Option Station Pro. So you get to see the various expiration dates available, and you can see here with Alibaba we got February 1st. Okay, that would be a great expiration date to use, but what's the problem again? Well, the earnings report happens 2 days before that, right? And could I use January 25? Well, that would be great. That would be fantastic. January 25, okay? But the problem is that even if you go, $2 away already, look at the huge, massive drop in premium from this option to that option. Okay, why? Well, because the option is expiring tomorrow, so there is no time left in the option, and therefore the price of the option is very low. It's like you buy an insurance policy that expires tomorrow. It's going to be way cheaper. Okay, so I'm gonna skip Alibaba because of that reason. Okay, I'm looking for anomalies. Okay, so what else can I find here? Okay, so let's take a look at. Let me see. I mean, there are a few good stocks here that we could use for that purpose. Okay, Microsoft is super liquid. Let's take a look at Microsoft. Microsoft, in certain conditions, does provide a okay premium. Okay, so let's take a look at MSFT. Okay, it's loading. My trade station is here. Okay, well, the setup actually doesn't look too good, isn't it? Because I got a lot of room to my UFOs. Okay, so this market, based on the scan that we did, is in a shy uptrend, kind of going sideways. But this market is likely to break out very hard to any of those directions because the next UFOs are very far away. Okay, so Microsoft actually does not meet the condition. And also earnings reported are on the 30. So we're gonna pass on Microsoft. Let's take a look at the next one. So look at Amazon. Amazon is a higher price stock. Okay, so maybe not suitable for all accounts because of the higher price point, but normally there is a decent amount of premium built in. Earnings report on the 31st. Okay, so that one will not work. So let's take a look at. I'll go one at a time since kind of like my favorite picks out of my experience trading those stocks are providing earnings reports before expiration. I'm just gonna go one at a time now. I don't have any preference anymore. So I'm gonna look at Boeing, BA. Okay, BA. Here we go. So, well, not yet. Okay, now January 3. Okay. So BUD. That one, you know what? I'm gonna leave it for later because it's less liquid. Caterpillar. Okay, so CAT. Caterpillar. Very, very good comment. A good comment there. Let me go ahead and copy your comment and put it in the main screen, so we can talk about it. Okay, so TraderX said Caterpillar is not going to work. Okay, we'll look at Colgate Palmolive, CL. So TraderX said, I thought options are better traded on a larger time frame, like daily, weekly, etc. Okay. And the answer to that is it depends. Okay. And while I'm giving you the answer, I'm going to be multitasking here. CL, Colgate Palmolive, is giving us January 28. Okay. So I'm going to go ahead and pick the next one, which is I'm going to go for Facebook because DuPont here, Dow DuPont is a little less liquid. Okay, so I'm going to go for Facebook. Okay, so we'll see that one. So the answer to your question is in one hand, yes. In one hand, especially if you are talking about time decay and things like that, you add more time, you add more premium or more profits. So on one hand, I would say yes. In the other hand, though, I would say it depends. Okay, and then on top of that, remember, we are looking for on-field orders, right? And even if you're gonna go, if you're gonna do non-directional trading from red UFO to green UFO in a daily time frame, which is fine. The fact is that now you narrow down to the 60-minute time frame, and you're gonna be able smaller UFOs are in that context, and it's gonna make you more profitable in most cases. I would say that instead of doing a non-directional trade, leaning against a red UFO and a green UFO, only one in the daily time frame, instead maybe leaning against 3 green UFOs or red UFOs in the 60-minute time frame, 3 that are kind of on top of each other, or even better, overlapping each other. So now you would be in a situation where you even have a higher probability, and basically what the lower time frame is giving you more resolution of where the on-field orders are. Okay, so that's what I'm doing. That's why I'm using a lower time frame. Then a different story will be which expiration date I will use with the, and because learning how to do all of this implies practicing, some of the trades I plan to give you are relatively short term. For example, a 1-week trade, a 2-week trade, okay? But once we get a little more experience with options, what we'll do is that we'll build like a ladder of non-directional trades, where some of your non-directional trade expire in, let's say, a week or 2, some of your non-directional trade expire in 2 weeks to a month, some of your non-directional trade expire in 2 to 3 months from now. And now you have a little bit of a time exposure diversification on top of the directional exposure. Okay, and that would be the ultimate goal. Okay, so it's very well said. But again, it's not exactly black or white. Okay, so you'll see me how I play with all those different parameters when the time comes. Okay, so we have Google here as well, and this one is pretty high price point, so I'll leave it for later. LLY. So LLY. Let's see what happens with this guy. And again, parameters of my scan are a little demanding, right? Because I'm looking at stocks in the market with the, I'm looking at the stocks in the market. I'm only getting the 25 stocks in the market with the highest level of premium in the options, and therefore many of them are very close to expiration, which is the reason why high premium. But now I pass on those because remember, I'm looking for rallies. I'm looking at no reason that high price. For example, Lilly has expiration date on February 13. Okay, and today it seems that Lilly very high price for the options. Okay, so let's take a look at Lilly, because if we were to find, here is Lilly, LLY, if we were to find a trade, for example, using expiration dates that expire on February 1st, and the earnings report is actually happening, on the 13th, which is the 15th expiration date. So I can use February 1st or even February 8th, collect plenty of premium. Okay, actually it's quite funny. Look at what a beautiful opportunity it seems that we have here, at least in the theory, and we need to look at UFOs. It seems that February 1st has more premium built in, 27 versus 24 or even 25, which is the expiration date where the earnings should be priced in, okay, which is the 15th of February, because earnings are on the 13th. So if we were able to use the 1 or the 8, I would prefer the 1. To able to use the 1st or the 8th of February as an expiration date, we may end up with a neat trade. Of course, we need the AutoUFOs to give us permission to do that. In other words, we need to have a collection of UFOs above and below that provide that opportunity. Okay, so what's happening here? Well, if I scroll, it seems that we only have one red UFO. Okay, so this is at the risk. Let's take a look at the daily time from here to see where are we at with Lilly. yeah, it's basically making all-times high there, or about to start making all-times high again. So I'm looking at the monthly time frame for Lily. Yeah, this thing is making all-times high, and there is nothing red in the relying on that 60-minute UFO. It's, has some risk involved. Okay, has some risk involved, because if the market comes back up and hits the UFO, price may go through. Now, having said that, it seems to be quite far. Okay, it seems to be quite far, and for price to travel there, it will take some time producing time decay. And the moment it gets there, we have a 55% probability that we'll get a bounce. And if we get a bounce, that bounce may produce 1 or 2 more days of time decay. And if we were to use the expiration date, which is February 1st, right? And on top of that, think about it. Tomorrow is Friday. So if we don't get stopped out on Friday, next thing you know, it's Monday 28th. So we just accumulated 1, 2, 3 days of time decay before we get stopped out. And that would reduce the risk of the trade dramatically. So you know what? Even though we only have one red UFO, I would rather have 2, or like here where you got 1, 2, and 3 green UFOs. That's fantastic, right? Because, these may go deeper into the green UFOs, but the probability of bouncing back up at some point is very, very high, because it's not only 1 UFO, it's 3, right? Unfortunately, we don't have the same on the red side, but we do have a lot of distance. Okay, so we still have some time decay to accumulate. So, you know what? I'm open on Lily. Okay, I'm open. I would like to put a couple of lines on the screen and see what we have. Because until I plan the trade, I will not know. So initially, I will think of 118.99, something like that, above the red UFO. I would think like a good place to stop myself out. And then I would think of those 3 green UFOs on top of each other, which is around 111. I would think of 111 to stop myself out. Why? Because, if I'm expecting this to stay in a range, well, based on where the UFOs are, the range should be the lowest 111, the highest 119. Is that making sense? If it goes above 119, this thing is making all-times high. This thing is not ranging. This thing is in an uptrend, right? If it goes below 111, this thing is not ranging either. This thing started a new downtrend. And therefore, thanks to the UFOs, I was able to identify this is my midpoint. What's pretty good is that, look at that, I'm right in the middle. From 115 to 119, I got $4. And from 115 to 111, I got $4. So it's looking good to put a trade in place. Okay. Now, before I do that, I want to double check my US stock pre and post market. Notice that the probability is a little less. Okay. So this is a little less relevant. Okay. But especially in the red side, if I was to see a UFO there, it would make me a little happier, maybe to move my upper line a little higher, but I really got nothing, so I'm just gonna leave it the way it was. Okay, if my pre and post market was to give me a higher probability, then I would want to move my 111 line below the green UFO. But because the 4096 is less probability compared to when I look at the regular session data only, it gives me 55.83. And on top of that, I got 3 UFOs, overlapping each other. So really, and it seems to me that 111 would be the right place for my trade. Okay, so let's take a look at how much I get paid if I sell the 111s. Okay, I get paid 36 cents. And how much I get paid if I sell the 119? I get paid 27. Okay, so the bad news is not too much. And really, what bothers me the most is not this, is that if I do a condor, and you remember this from prior sessions, okay, I'm just gonna type it on the screen just to be very visual. So you would buy a call above and sell a call below, and then in the bottom part of the range, you will sell a put below, and you would be buying a put below the put you sold. Okay, so let me change also the color of the text. So this looks better on your side. We'll make it purple. So for example, if you sell the 119 call, okay, you may be buying the one above, let's call it 120. Okay, and on the put side, if you sell the 111, you may be buying the one below, which is 110. Okay, just to give you a visual, we need to explain why those figures and everything. Okay, and we will in the sharpening sessions. But so in other words, if I do this, I'm going to sell the 111, buy the 110, and here's what really disappointed me a minute ago, is that if I sell the 111, I'm going to get paid 36. But look at the crazy spread available on the 110 from 28 cents to 216. If I buy the 110, right, the cost I would need to pay to buy the 110 overwhelms the credit collected by selling the 111. And therefore the trade will not be valid. So it seems I'm lacking a little bit of liquidity here. And you know what? Maybe you place an order and you really shave very hard and you get a good price, because Lilly is not the most liquid stock, but it's not that bad. But in this case, it's not looking too good. Okay, and same thing is happening here. Okay, so if I go for the next expiration date, yeah, 6110. So this is interesting. This is telling me, and this sometimes happens. Again, out of experience, I know that Lilly is not the most liquid stock in the stock market, but normally is okay. Okay, not too exciting, but okay liquidity. The difference between the bid and the ask is more or less okay. But in the case of today, I guess that the market makers know something about Lilly we don't know. Okay, and they are widening the spreads because they anticipate danger, and I don't know what that danger is, and therefore we are not going to take this trade. Okay, we need to have a little more certainty on what we do. When you see spreads going crazy like that, this is an indication that market makers know something that the public doesn't know. Okay, LRCX earnings were yesterday, so thank you for that, Mark. If earnings were yesterday with all LRCX, I'm not gonna put time into planning this trade, because that probably means that the level of inflation, the level of premium these options had, is probably gone at this moment in time. Okay, because the moment earnings are released, it's like you release a balloon. A lot of that nice premium that we want to collect goes away. Okay, so let me see. 23 of January, that was Las Vegas Sun, got earnings yesterday as well. So transition updates data end of the day, and that scanner is showing us those options as valid. But the fact is that they are not, because the earnings already happened. This is the consequence of having end of the data for options. Thank you for that, supply and demand trader. Okay, so wait a minute. I thought I hit. I'm not sure why. Okay, I guess everything is updating. So we'll wait a second patiently. Cool. This has McDonald's has an okay setup, right? With UFO do a non-directional trade. So let's see the earnings for McDonald's January 30. So unfortunately, it will not work. Microsoft, we looked at it. Starbucks, SBUX, January 24, so it already happened. Tesla, well, we did a trade the other day, the one that I showed. Then there was this crazy announcement, and now we will have earnings on the 30. Okay, so no Tesla. Texas Instruments had earnings yesterday. UNP this morning. So we are now going to look at UPS. Okay. And what's happening to me today, it happens to be probably a week one of those weeks where you have many earnings in the week, next week, and therefore, when I list the 35 stocks in the market with, the 25 stocks in the market with the greatest premium, it does not give me too many choices. Basically, the only one was Lilly, but unfortunately, we got the liquidity issue. So when that happens, I'm going to show you what to do. Well, if you do this on your own, okay? Valeo, Win. Valeo and Win, we got 2 more to check. Okay, notice that January 30, I just kept skipping the ones with January something. I need expiration dates beyond February 31st, okay? Let's take a look at Win. Okay. Yeah, so same story. So look, this is one of the weeks, okay? So what do you do in a case like this? Let me show you what to do in a case like this. You come to your scanner, okay? And because the 25, remember, the parameter I got here is show me the top 25. What's the risk? The risk of showing it like that is that if you are planning a trade on a week where many expirations are going to happen soon, maybe those 25, none of them qualify for what you need. So I'm going to add 25 more, and I'm going to make these to be 50. Okay. So 50. Here we go. And now I'm going to run. Okay. And it should happen pretty quickly. And the beauty of TradeStation is that, well, you're going to get a list of 50, right? Where 25 of them we're going to ignore. But the beauty is that TradeStation will highlight with a different color the symbols that are can. So very nicely, very visually, we'll be able to see the 25 added symbols that we need for our analysis. Okay, guys? And while we wait for this to happen, because my computer uses a lot of processing power when I'm streaming video, because I'm streaming via iZone, YouTube, and Facebook at the same time. So my computer is really requiring a lot of intensity there. So it's going to take a little bit of time. Normally, this is way faster. So what I'm going to do is I'm going to, again, look into explaining more the non-directional trading here so you understand. For example, we're not going to do it with McDonald's. We said that already. But again, if you think about the fact that you got UFOs above, basically what I could conclude is that price is not likely to reach this level anytime soon. And why is that? Well, because price could certainly reach that level, but to reach that level, it needs to go through 2 red UFOs, where they basically got 50% probability of pushing this market down. So could it go straight up? Yes, anything could happen. And if it was to go straight up, there is a lot of distance to travel, and therefore we take time, which also implies time decay, and therefore less risk. But what's even more likely is that price will not reach this level anytime soon, because those red UFOs are likely to produce some sort of a bounce. And I'm not saying a complete reversal of the marketplace or anything like that, but at least some sort of a bounce. And now, instead of reaching this in, let's say, 1 day, it may take 5 days. So now you have accumulated 5 days of time decay, and you add a weekend in between, and basically now your options expire. You made all the profit, and you didn't care much on where the market went. Okay, so that is to do that, and therefore sell options at this level. Okay, because when you sell options, here. Okay, when you sell options, what happens is that you collect premium, right? And what's the risk attached to selling options? Well, if you sell options, the risk attached to selling options is to be assigned. That's how it's called in options trading, to be assigned. Okay, but what did we say? We said price is not likely to reach that level anytime soon. In other words, you are not likely to be assigned anytime soon to assume the risk of not being likely of being assigned, right? So it's quite smart. And by the way, you do it also to the downside. So if you measure the distance from here to here, okay, this is kind of like $3.73. Okay, so if you project to the downside, is more or less here, right? So which very nicely, it's kind of equal distance as well. So what can I say about this? Well, the same thing I said before. Price is not likely to reach this level anytime soon. Okay, same story. Okay, why? Because it's far, and why? Because you have two UFOs to defend yourself from that happening anytime soon. Could it happen? Yes, but if it happens, it will take time, and if it will take time, does that mean you will collect time decay? Okay, so what do? At this level, around, let's call it 183, you would sell options, okay, at that level. So let's sell options here again, okay? And so you do the same thing you did above, you do it below. Okay, that's called non-directional trading. And what's the beauty of it is that if you are wrong, and instead of staying between the UFOs, it goes above, yeah, these options that you sold up here will hurt you, but the ones you sold below will pay you. So you kind of offset, and you have the time decay. And if it goes down, the options you sold below will hurt you, but the options you sold above will help you. So you will still lose net. The offset from the options from the other side will help you. Okay, that's the idea. And we have the list. So take a look how now we have some of the symbols in blue color. Okay, and what are those symbols meaning? What does blue color means? That these are symbols that were not in the prior scan. Okay, so now we can go ahead and try to apply this to the prior scan, to this particular scan. So I'm going to do this. I'm going to put my window here on the side. Let me do a couple of searches. So I'm going to look at, what do we have here? That is nice. PayPal is a stock I like very much for options in the sense of their premium, etc. So let's take a look. I'm going to finish a little later today as well because we started later. Okay, so expect finishing, 10-15 minutes from now. Okay, so January 30. Okay, so we will not be able to use PayPal. What else? NVIDIA could be a nice pick. NVIDIA, February 7th. Here we go. So we found something. So let's click NVIDIA. We load the chart, and the key will be to look at the AutoUFOs because, we are trying to put multiple elements together, well aligned, because that would increase our odds, isn't it? That's what we're doing. So we are looking at the UFOs, we are looking at the level of premium, we are looking at all those different things all together. So I got pending data here for NVIDIA, PD on the upper left. That means that we need to wait a little bit until the data is downloaded, and the moment the data is downloaded, then we'll be able to have the whole chart in front of us. So little patience here. Here we go. So yes, we have red, we have green, we have red above, we have green below, right? So 52% probability, we have inflation in the world of options premium. So let's take a look at what we have here. So we said the expiration date is February 7. So that would limit me to use February 1st because I want the options to expire before. If I look at the 162.5 or something like that, this is paying me 2.70. If I look at the, 140 or something is paying me. Yeah, 150 is one. Yeah, there is premium, and you can see here the difference between the bid and the ask is much narrower than before. So I feel much more comfortable to get organized here to plan some sort of a trade. Okay. Yeah, I'm just looking at this. So looking at the chart and having some thoughts that I'm going to share with you in a second. Okay. So guys, I mean, in a perfect world, you know, price is not likely to come here, so you will want to sell options here. Okay. If I was to do that, I will be selling the 175 at the 175 is going to pay me 50. Okay. It's very limited premium because the distance is humongous. Okay. Let me take a look at this because I need to find a way that is mechanical to reduce the distance if that's possible. If it's not possible, then I won't. But if it's possible, I would like to. So if I look at overnight data, it gives me 52%. Okay. US stock pre and post markets. If I look at realization instead of 52, it gives me 5208. So it's kind of the same. So more or less the same probability, actually a little more of the overnight data. So it's convenient because if I look at the overnight data, I have multiple things here that excite me. First of all, I have this UFO here. So I got 1, 2, and 3 UFOs on top of each other, where this UFO finalizes at the ending price. Oh, it's the same one. It's the same one. Yeah, it gave me a different visual feel. Sorry for that. So we need to work on those two then, I guess, and we're gonna have a problem because the red UFOs are very close to the current price, where the green UFO below it's not. Is not that close. Okay, so we're gonna be doing an unbalanced. Okay, it's gonna be an unbalanced non-directional trade, which we could certainly do, but it will be too advanced for today's session, especially without doing the sharpening. So I'm looking for something simple, and therefore the most I could do here. Yeah, I mean, all the possibilities that we have available here would imply using more advanced option strategies where we are not really ready for this yet, guys. Okay, so let me see. If I use this time frame, sorry, not this time frame, these settings with the regular market data, I got this distance here, and I'm looking for setups with more or less equal distance. You can see I'm not totally equal distance with the green UFO below and the red UFO above. Okay, so NVIDIA would not qualify. You know, earlier in the day it was a great peak when NVIDIA was trading down here. It was a great peak, but not now. It's a little too late. So let's look at another symbol. I mean, I look forward for when we spend a little more time together. I look at Expedia because we could certainly put an options play the way NVIDIA is at the moment. Okay, but I feel it would be a little too advanced. Okay, so we'll keep it for later. Expedia is also. Oh, thank you so much, Supply Demand Trader. You identified that as well. Thanks for that. Expedia also has that February 7 expiration. Expedia is less liquid than NVIDIA, but in most cases, it's more or less okay. So let's take a look at Expedia. So we are loading Expedia here in the option chain while we are also loading the chart of Expedia. And when I look at Expedia, I'm going to look at same February 1st. I'm going to skip February 8 because of the problem I told you before with the earnings on the 7th. So we want to use the expression before earnings. Okay. So notice that 85, 95, 60, 70, 45, 55, 70, 85. So liquidity is decent. It's not amazing, but it's decent. And now we just need to look at the chart to finish loading PD, pending data. And we'll be able to plan a trade on Expedia. Okay, so let's take a look at that. I'm just gonna draw a line here. The line means nothing. I'm just saving time, changing the color of the line. I'm gonna load actually 2 lines because I will need to. Okay, so I'm just putting them down here out of saving a little time. So I really look forward for the sessions that we'll do soon, sessions, because that will really help us to then save a lot of time when putting the trades together, okay? Because then we'll speak the same language much closer, okay? So it'll be important for you to attend, okay? So here, for example, I got two red UFOs on top of each other. So I could certainly go for 119.51. So if I do that, what premium do I get? If I sell the 120s, I got 70 cents. That could be okay. And, you know, here, I could go ahead and go for the 114. So that would be like $2 above, and that would be like $3 below. So it would not be exactly centered. So I'm curious to check if I can have something a little better centered if I was to look at the US pre and post market. That gives me 33%, it gives me 43%. The regular session gives me 50%. So in the case of Expedia, pre-market data is not that relevant. So I would it here, okay? Another thing I could test, which I don't think it will work, but is worth it, for this one, the 116. And let me see if I was to use the 25. So the 116, how much premium? Not enough. And yeah, so the 25, the one that expires tomorrow, is really too short. So let's do this, okay? I want to plan on a trade on Expedia. Really, the bet is to go through the weekend. That's the idea. Survive the weekend. That would be the idea. So I want to be selling very short-term options. I'm gonna be buying the 121 call, selling the 120 call, and then below I'm gonna be selling the 116 put, and then buying below the 115 put. That would be the idea, at least my initial plan. But I'm gonna put this in place. I'm gonna run a simulation, see what happens, and if it looks good, we'll take the trade, and if it doesn't look good, then we'll say goodbye, and we'll see you on Sunday. Okay, guys? Yep. Yeah, Mark, agree. Thanks for that. I see your comments as well, Mark. So, so here we go. So select from single, we're gonna look at Iron Condor, pointing at February 1st, and I'm just gonna click anywhere. Well, actually, I should not click. I'm just gonna right-click and analyze selling an Iron Condor. Okay, and this will open my analysis window. And cancel. I trade that I had here. Oh, I just canceled the Iron Condor. So let me cancel this one and replace it. Here we go. Good. So right-click, sell Iron Condor. I have it here. And then, like I've done before, I'm gonna add 3 price slices, which one represents when you're wrong above, one represents when you're wrong below, and the one in the middle will represent price. Okay, so I want to go for 119.50. Okay, I went a little too far with the digits. The one in the middle will be the last, which is the current price, and the other one will be 115. 87. 115. 87. Okay. Yes, got it. I don't know why my translation does this when I share screen. Anyway, so let's now adapt to what we said before. So we are using 121, 120, 116, and 115. Okay, that's what we're doing. And I'm just going to maximize this so we have a better view. I also need to go back to the proper settings here. Okay, good. So what do we have? If I was to do this trade, I would collect 35 cents. And if I get stopped out today, I lose 29.52. Okay, so that would mean that this trade would be a little better than a 1-to-1. Okay, so what if I drop 116 to 114 and I raise 121 to 122? Well, now I get $80 and my risk is 33. Okay, so if I do 80 and my risk is 34, that's a 2.3 to 1 trade. What if I do 113 and I do 123? So now I get 105, okay, and my risk is 41, as you can see. Okay? 41 or 37, I'm using the worst number. It was 41 a minute ago, I'll use 41. So that's a 2.5 to 1, and I'm gonna say that's good enough, okay? So by doing a condor like this, you are collecting $105 per condor. Okay, and then of course, I would like to point at something very important here, that in order for you to get the risk of 35 that shows here, you need to use stops. Okay, with condors, we'll talk about not using stops, which is another possibility. But right now, I would like to ask you that if you don't know how to use stops on condors, I would like to suggest that you don't take the trade. Okay, or you take it with paper money. Okay, because obviously this trade implies the use of stops, and I know based on your comments that some of you have not traded options before, so I need you safe, and therefore I'm going to suggest for the traders that you have traded options before, and you know how to deal with a condor, and you know how to play stops on a condor, then you can go ahead and execute this trade like I'm doing myself. You can go for anywhere between 105 to 127. You know, I guess that Expedia is not the most liquid in the world, but it's not too bad. I would start bidding 120 or something like that. Okay, and you may get it for 120. Worst case, you'll get 105. Okay, so you can get 105 if you go for a market. You can try 120. I will leave this at your discretion. Okay, just putting the trade in the system, and I'm in. Okay, so that's it. I got the condor on Expedia. And now we will just allow, and on Sunday we'll talk much more about all of this and how to do the non-directional trades and the options and everything. Okay, guys. But anyway, I want to be respectful of your time. It's 20 minutes past the hour, so we started late, but I'm also concluding the session with a little delay too. I mean, in one hand, I love to give you as much as possible. In the other hand, we need to be respectful of your time. Okay, so we'll conclude the session here. If you have any remaining question or extra request, this is your time to type. So please let me know. So I'll still have time to give you a final answer if you have a remaining question. And if not, we're just gonna say goodbye, and we will continue next day, which next day will be Sunday. Okay, quick reminder here. Sunday, 27, 1 p.m. US Eastern Time. Okay, keep this in mind. 1 p.m. US Eastern Time. Good. So it seems that, yep, based on your comments, questions, and everything is clear. So thank you so much for joining me today. Have a good weekend. I'll see you in the middle of the weekend. I'll see you Sunday morning time. You guys take care, and remember to click on the little bell, okay, in our YouTube channel. Make sure you click on the bell, okay, so that way you will have here, you will have direct access to whenever we post new things, you're gonna be alerted real time. Okay. Anyway, guys, very good to spend some time with you here. Good job with your questions, your emails. See you on Sunday. Bye bye, my friends. Take care.